Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Hope you guys had an amazing Halloween evening yesterday and it's a new month. It is November 1st of the month. Now, guys, got FOMC tomorrow at 2 p.m. Okay? It's gonna be amazing. Alright? The reason is it's gonna be some amazing volatility. 2 p.m. when FOMC data drop. Alright guys, before I get into the technical analysis, the unbiased technical analysis, I do want to talk to you guys about the FOMC. Alright guys, let's go. Okay, so I am here on finviz.com/calendar.ashx. Okay, see some calendar, economic calendar. You can see here Wednesday, November 2nd at 2 p.m. FOMC rate decision. The current federal interest rate right now is 3.00 to 3.25%. We are expecting 3.75 to 4.00% tomorrow. So we're expecting a 0.75 BPS. Okay? Now, the way I usually interpret the data so that I can trade it is if it comes in higher than expected. So if we're getting something higher than a 0.75, it could be bearish on the market. Okay? If we get something lower than 0.75, like we get a 0.5% BPS, then it could be bullish for the market. Okay, now keep in mind, I am not the best fundamental guy. Okay, I'm more technical analysis. So with that being said, let's get into the technical analysis. Here is the 15-minute chart for the SPY, and all these lines that you see is all my support and resistance levels that I give to you guys and I trade based off of. Okay, so in my Discord I always have the bull case scenario and the bear case scenario. It's important for us to be ready for either scenario, anything that can happen. Be prepared for the future, not trying to predict it. So basically I wrote here, like I always write, the real bear case takeover if 380 fails. But as of writing this, SPY is around 389. This puts 388, then 386 as the next support. Since this was yesterday's chop range, because you look on the 15-minute chart, it was chopping yesterday on Halloween between these support and resistance levels. Okay, a failure of 388 would be a false breakout setup. That's bearish. And below 386 would put 384, 382, and 380 back in play. As always, look for puts when a support fails, or if a false breakout setup appears, and play it level to level. That means we play from one level to the next, okay? This was written at 7:02 a.m., okay? I updated the group at 9:27 a.m. before the market opened, and I wrote here, because I had to update on the levels, okay? I got first support at 390 with 387.5 and 380 below. First resistance above 390, resistance above 390 is 392. Then 393.5 to 394. Watch for the breakout or breakdown. Okay, if you guys been watching me long enough, you guys know I like to execute my trades based on the 15-minute chart. And this blue line right here was that 390 level. And the reason why 390 was the first support level was because you can see here on the first candle, SPY opened here at what did it open? Sorry. It opened at 390.14. Okay, so it opened above 390, and on the 15-minute chart, you can see it closed below 390, which triggered a big drop to the downside. Okay, this was covered in the Discord. Unfortunately, though, at the rest of the day, especially in the afternoon, SPY just spent the rest of the day chopping. Now, from a technical perspective, a pattern that I'm seeing here, and I did Google this, the evening doji star, okay, this is usually a bearish reversal, and it looks something like this. According to forexb.com, it looks something like this. It go up, down, makes a high, big, decent drop, chop a little bit before dropping back down, but it's a green candle followed by a choppy candle and then a red candle right there. and you're looking at this 15-minute chart, it looks pretty similar. Okay, looks pretty similar to this. We're chopping, and now it's just working on the right side of that chop range right here. Okay, so looking at this technical on the smaller time frame, it does look a little bit bearish, and even in the aftermarket, it's pretty bearish right now. But you guys know, during the trading hours is where most of the volume happened the most. Okay, so that's what's, to me, the most important price action. But based on this pattern that I'm seeing, it does match up a little bit with this evening doji star. All right, going to the daily chart. Okay, I had that 384 level that was based on the 5-day moving average. Okay, that's this red line that you see here. In a downtrend, the price spends a lot of time below the 5-day moving average, as you guys can see. In the uptrend, price spends a lot of time above the 5-day moving average. There are times where it gets a close below the 5-day moving average, but recaptures it, which usually triggers more upside. Okay, and that's with that 384 level. So very critical that 384 level holds. Is below it after market right now, but we'll see if we can get back above it tomorrow morning during the trading hours. Okay, because below 384 is below the 5-day moving average. So if it does get below the 5-day moving average, the next level that I would be watching would be around the 50-day moving average, which is at 382. Okay, so this is the bear case scenario. Below 384, it would put 382 in play. Okay, we cleared the 50-day moving average last Friday. So losing the 50-day moving average would be very bearish and put 380 back in play. Below 380 would be pretty bearish as well. That's the 38.2 retracement level. We already got this strong rejection from the 50% retracement level, which was at 390. Okay, so I trust a rejection more when it takes out a support level. That critical support level based on the daily chart is 380. All right, so 384, 382, 380. 380 fails, that's bearish. Okay, and that would put definitely put 372 in play. Okay, I do have 378, 375.5, and 373.5 to watch out for. Add those levels on your charts. Okay, below 380, I have 378, 375.5, 373.5, and then 372ish. Below 372ish would be a break back below this downtrend line right here, false breakout setup. And it would also break back below this multi-year trend line connecting September 2020 low to October 2020 low to June 2022 low. All right. So like I said, it needs to stay above 384. Okay. If it can hold 384, it needs to recapture some level. This is the bull case is recapture some level, that 386 level. All right. Then recapture the 388. And possibly even recapture 390. Above 390, I would favor more upside in the relief rally continuing. Okay? But as of right now, that looks like a hot stove rejection from that 390 level, the 50% retracement level. And also with this intraday pattern is looking bearish. But FOMC tomorrow at 2 p.m., that's what matters the most. It can serve as a catalyst to push it up or down. Okay, and what happens at FOMC tomorrow would most likely cancel whatever pattern that we are seeing. So definitely watch out for that. I would size down tomorrow. If you don't like volatility, I don't recommend trading tomorrow. Take the day off. But if you, like me, love volatility, trade it unbiasedly. Know the levels, know the setups. Just trade it unbiasedly. The false breakouts and the false breakdown is Uncle Charles' favorite trade setup. Keep that close to you. Keep that in mind tomorrow. All right. QQQ, also a strong breakdown as well. You see this white trend line that I got. I'll make it a little thicker. It connects October 25th high, October 26th high, and today's high. Actually, it opened above that but broke it down intraday, taking out a bunch of support levels starting with 279.5 and 277. Okay. I got a critical level around 275 that is the 200-week moving average. If you go to the weekly chart, the 200-week moving average is currently at 275.33. Okay, so yeah, we break. It's It did close below that today, okay? But that's a weekly chart level. There's still a few more days left in this week, right? So the next below 275, the next critical level would be at 273. But that's the 23.6 retracement level. Below 273 is very bearish, guys. And we'll put lower price targets in play at like 269, 267, and 264. All right. Here's Tesla. I got a lot of levels on Tesla. But yeah, I got a 23.6 retracement level at 226. Okay, this starts from August 15 high down to October 24th, 2024 low. Okay, so if Tesla loses that 226 level, that's pretty bearish. Okay, that's 222 in play. I got some levels at 218.5, 216, and 213. Below 213 is very bearish, and put more price levels in play. 211, 208, 206.8, and what I got level right here around 198.96. I'll write 198.96. Yeah. So yeah, 226 must hold. Okay, if below bearish, as long as 226 holds, I got more price targets around 230 and above that 233 and 237. It actually tested that 237 level today, but had a strong rejection. So bulls need to clear that to trigger more upside. 243 and 249, almost 250 in play with 256.5 above that. Okay, we're gonna end this with the option flow. Filter for 500k premiums or above. 84% for puts. Okay, nothing is sticking out to me, but overall bearish as usual, at least as far as big money is concerned. QQQ 98%. All right, now this one sticks out to me, over 5,000 in size. All right, 270 strike November 4th. Okay, this is a sweep, 1.1 million. Okay, despite FOMC tomorrow, this person's bearish November 4th. Okay, but maybe they took profit on it already. But yeah, that's there. Let's see, Tesla. Yeah, 68% for Tesla. That's for puts goes. Okay. All right, guys. I hope you guys found value in that. If you want some more content from Uncle Charters, check out the pinned comment in the comment section below. All right. Peace and thank you.